Hey, what's up guys? John here. Real estate investors have decreased their purchases a massive 45% so far in 2023.
Existing home sales just coming out and falling for the 12th consecutive month here.
This is by far the biggest drop since the 2008 Great Financial Crisis. Overall home sales down 31% in 2023. However, that may be shocking to some, but what's going to happen next is going to be unbelievable. We're going to see multifamily and single-family rentals get completely restructured all throughout America, and we're going to see rents crash to the levels in which we've never seen before. I believe we're going to give back all of the rent gains that we have seen over the last 3 years in the course of 12 months. And many people might say, that's crazy, it'll never happen. It's already started. It's already started. I'm going to show you the facts of what's happened already and where this is actually going. Because if you're a real estate investor, you're planning to be, pay attention to this. You're going to see some massive investing opportunities coming very, very soon. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's going on in the real estate market and the housing market. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, you have negative items on your credit report holding you down, do not let it sit there. One late payment can drop your score upwards of 180 points and stay there 7 years. It's absolutely crazy. So don't let one or a few items hold you back from a bright future. Go to GreatCreditFast.com, schedule a free strategy session. Take a look at this. So higher rates and low supply have sent the housing market to a halt. Not even investors can afford this market. Well, look at this. This is apartments, right? It's crazy. As of the end of August, annual rent growth stands at minus 1.2%, which translates into apartments nationwide being 1.2% less costly than they were a year ago. This represents a big switch from the recent years when annual rent growth soared 18% nationally, and in some of the most popular cities skyrocketed more than 40%. Areas such as St. Pete Beach, Miami Beach, areas in which 0% income tax, good weather, not restrictive like New York City, San Fran, or Los Angeles, where everything was closed. You saw mountains of capital flowing to Florida and Texas and different markets that offered more favorable lifestyle and job benefits. Now we're starting to see a series of trends that are unfolding here. It's going to be like a string of dominoes that are about to fall. So homeowners who held on to a 3% mortgage rate becoming accidental landlords. Now, I did a YouTube video saying that this was going to happen 5 days before Fortune Magazine and Yahoo News, saying everything that they're saying now here in this article. You can pull it up on my channel. Actually, I'll leave it pinned in the description. But look at this. So the rise of the accidental landlord, homeowners have locked in low mortgage rates, are clinging on to these cheap deals by refusing to sell up and are renting out their homes instead. But can they really make a good income? The answer is no, because insurance is going to continue to rise, property taxes are going to continue to rise, and there's going to be more and more and more pressure down on rents. 40% of all U.S. mortgages were originated between 2020 and 2021, when the pandemic drove borrowing costs to historic lows, right, triggering a refi boom. So you've seen a large block of the U.S. housing stock refinance at 2, 3, 4% mortgages, thinking that stocks are going to continue to go up, crypto is going to go up, everything is going to be great, everything's going to be good for a very long time. And so people borrowed as much debt as possible. Now they're stuck in these properties, and many are going to be forced to rent out these homes. And when they rent out these homes and they have a lot more inventory that's about to hit the market, it's going to be a race to the bottom, right? It's a race to the bottom. And then people are going to ask themselves, hey, why am I going to go buy a house, a $500,000 house, $400,000 house, and with today's mortgage rate, spend $4,000 a month? I'll just rent for $1,500, $1,800. And you're going to just start seeing a lot more demand on the rental side, and a lot of these properties that can't be sold, they're going to be sold to investors that are going to turn them for rent, right? So you're going to just start seeing a lot of inventory for rent. And if you increase supply dramatically, supply and demand dictate price. You're going to start seeing rents continue to go down. At the same exact time, remember 2020 when the beginning of all the madness, they said in LA, San Francisco, New York City, they were offering first month, last month rent free. They were offering all these perks and bonuses. They just wanted to fill up the building. They wanted to fill up their units. Well, remember that happened. Well, that's going to happen again. That's going to happen again. That they're going to start doing the same exact thing to try to stay competitive. And one of the main reasons may be this situation. In 2008, rents dropped 0.3%, right? So you started seeing this slip, but this situation that they're going to be going through is this refinance crisis right here. $1 trillion wall of worry, right? They have to refi in the next 12 months, 2.5 trillion they have to refi from now until 2027, right? So they need to fill these buildings. They need to try to, drive value to these assets. And if they're sitting on a bunch of vacancies, it's going to make their small problem much, much, much worse. So what I believe is going to happen is landlords that have equity, that have capital, that have cash, they're going to start offering these perks, these bonuses, trying to fill up their units. Many landlords are not going to be able to because they bought 3 cap deals, they bought 3, 4 caps at record low interest rates. They have to refinance at a 7-8% mortgage rate. In a softening rent environment, they're not going to be able to withstand the pressure, right? They're not going to be able to get the refinance. They're going to have to give the keys back to the bank. But the landlords that can, they're going to start offering deals. They're going to start doing what they can do to rent out their buildings because rents are going to continue to slip. On top of that, a $2 trillion corporate debt wall will spark job losses 2024. How can that be good for rent growth? It's not going to be good for rent growth. The affordability crisis is going to continue to get worse. Energy prices are going to continue to rise. Inflation is probably going to continue to get much, much worse. So we're going to start seeing more defaults. That's what you're going to start to see. You're going to start to see a rush towards affordability. And that is what I believe is going to be a very, very big trend. Affordability, this crisis is going to continue to get worse. Now, a very unique and interesting thing that's also happening with single-family homes is that it's crazy. If you go across a period of 25 years, this is the absolute lowest in terms of unit volume that we've ever seen for refinances, right? Mortgage lenders are bleeding money, right? This came out yesterday or 2 days ago. The Mortgage Banker Association forecasted $855 billion in mortgage originations for the first 2 quarters of this year. However, they've been short $59 billion as mortgage applications continue to decrease. Independent mortgage banks and other mortgage lending subsidiaries reported net loss of $534 per origination, right? How do you stay in business with that? You don't. At the same exact time, you got 1.7, almost 1.7 million housing units that are about to hit the market, many of which are going to go for rent. So you're going to have a ton of supply that's going to continue to hit the market. It's going to be crazy. Now, what I have a belief that I actually think institutional investors want rents to crash. I believe they want rents to fall in a very big way. Now, many people might say, why would they want rents to fall? They want to get a return on their investment. They want to make money, and they can't make money if rents are crashing. But institutions to own 40% of single-family homes by 2030. And the same thing is on CNBC and all these different other mainstream outlets, that they're going to take their position of 5%, they own 5% of the housing stock right now, to 40%, an 800% increase in 6.5 years. How would that work easily? Well, rents would have to crash, the market would have to crash, they'd scoop in, buy up everything, then jack up rents to the roof, right? That's what I believe is going to happen. They want rents to crash in the short term to acquire market share, and then they're going to continue to increase rents. So if you look at mom and pops, they own 41% of a $50 million unit stake, right? So they own about 20 million housing units. 20 million housing units in America, 20,500,000 to be specific in America, right? And so how are they going to go increase their position 800% if mom and pop owns 20 million housing units and they're not going to give a lot of those back to the bank, right? They're going to. And even policies show it, right? If you go here and you look at, and I think this website is so fascinating, I've mentioned it a couple times before, but if you look at this website, UK government, Ministry of Foreign Affairs, Denmark, Federal Ministry of Environmental, Nature, Conservation, Nuclear Safety. You look at a lot of these companies, this is a legitimate website. It's not some fly-by-night operation. Got George here, everybody knows George, L'Oreal, IKEA, Hewlett Foundation, FedEx. You got a lot of the big names, right? A lot of the big names here. You got Hillary, you got World Bank, you got London School of, you just start looking at this. Then you look at their plan for real estate. It's fascinating because I believe that this is going to continue to drive rents even further. So they say that buildings, we'll start right here. The need for buildings and infrastructure will only intensify by 2025. We will need to build 1 billion new homes. 1 billion. Now, many people say, I'm not going to build 1 billion houses. That's ridiculous. There's 8 billion people in the world. How are you going to build, 1 billion homes in a year and a half? Well, look at this. And they're not going to do that, by the way. But they set this huge target, and then we're going to start moving towards it. in a small scale, and probably over time it'll only increase. But look at this. A new lease of life. Denver unveils 16 office towers best suited for conversions to residential, right? And if you start to look at if you just basically go and look at, let's just call it the last month, and you start to look at a lot of these conversions, Mayor Adams, New York City, New York is talking more about it. Cities explore ways to promote office to housing conversions. You got 10 pages of all these empty space in Calgary, right? It's happening everywhere. In Canada, all these pages of all these different cities, countries, locations pushing for these office to residential conversions. And how are they going to do this? It's very fascinating. So they say about 60% of buildings will exist by 2050, haven't been built yet. This means constructing city the size of Stockholm or Milan every week until 2050, or city the size of Singapore, New York every month, right? And so you start to look at a lot of these trends. Jerome Powell, Biden, they're saying that the biggest problem with inflation is housing costs. Housing costs. They want rents to come down. Everyone, with the exception of landlords and multifamily property owners, they want rents to go down. And so what are they going to do? They're going to continue loosening zoning laws. They're going to continue to push these office residential conversions, and it's going to be a race to the bottom with single-family home rents, apartment rents. Home builders are going to start unleashing a ton of inventory. They thought they had all these home buyers at 3% mortgage rates. Now rates are 7.5%, 8%. These home buyers can't afford that. What are they going to do? It's all just going to be additional inventory. So I believe rents are going to crash in a very, very big way. I think it's going to completely reprice a lot of these assets. I think a lot of landlords are not going to be able to refinance their buildings, and they're going to give the keys back to the bank. And there's going to be a huge opportunity to make a fortune in real estate in 2024, 2025. It's going to be like a tsunami in the real estate market. And that's the fact. That's what's actually happening. What do you think about it? Drop below, hit the like button, add me on IG. If you want to fix your credit, you want to position yourself in the greatest real estate investing opportunity of all time. This is going to be way, way bigger of an opportunity than we've seen in 2008. Go to greatcreditfast.com if you have bad credit. Your credit's below 750. You have one late payment. You have a few issues, maybe a repossession, bankruptcy, foreclosure. You have some issues on your report. Get a hold of us. Go to greatcreditfast.com. Book a free strategy session. We'll tell you exactly how long we think it would take to fix your specific situation, what the process would look like, and see if it's a fit, see if it makes sense. But go to greatcreditfast.com. Book a free strategy session to learn more. Don't just ignore a problem on your credit report and miss this massive opportunity. Catch you guys in the next video.